Hello traders, welcome back to my channel. Today we are going to break down two critical concepts you absolutely need to understand when trading forex, which is the bid price and the ask price. These two prices are the core of how forex trading works, so stick around to fully understand how they affect your trade. Now let's start with the bid price. What is a bid price? The bid price is the price at which the market is willing to buy the currency in a currency pair. In other words, it is the best available price at which you, the trader, can sell the currency pair. Now, what is the ask price? The ask price is the price at which the market is willing to sell the base currency in a currency pair. It is the best available price at which you can buy the currency pair. So, in a nutshell, the bid is the price you can sell at, and the ask is the price you can buy at. And the difference between the bid price and the ask price is the spread. It's what we call the spread. The spread is the money the broker charge you for placing a particular trade. So that's it. So now, how did bid and ask prices work in forex? Let's visualize it with a quick example. Okay, this is a demo account. Let me use it to show you the practical aspect of bid and ask price. Let me use chart. So this is a live market, and as you see in this chart, there are two lines here. We have one green line and one red line. So this green line represents the bid price, while the red line represents the ask price. Then the difference between these two lines is what we call the spread. That is the amount the broker charge you for placing a particular trade. You notice that whenever you press buy or sell, that you are in a losing side already. The reason is because the broker automatically takes away the spread immediately you press buy or sell. So for here, I said that this green line is the bid price, while the red one is the ask price. So if I want to press buy now, I will fill in at this red line. Why, if I press sell, I will fill in at this green line. So that's how it works. Now let's talk about why do bid and ask price matter. Understanding the bid and ask prices is critical for a couple of reasons. Number one reason is execution of orders. Every time you enter or exit a trade, the bid and ask prices determine the exact price at which your trade is executed. If you want to buy, you will always pay the ask price. If you want to sell, you will receive the bid price. So that's it. Now, the second one is understanding the trading cost. The difference between these two prices, or the spread, is essentially the cost of trading. So like I've explained before, it is the money the broker charge, which is spread. That is the difference between the bid and ask price. So when you see a larger spread, know that the money your broker is charging you to place that trade is higher, and vice versa. Now, number three reason why bid and ask price matter is the liquidity and volatility. The bid, ask, and spread also reflect liquidity and volatility in the market. If a market is highly liquid, such as major currency pairs, the spread will be tighter. That is, the spread, the money your broker will charge you will be smaller if the market is highly liquid at that particular time, and the trading cost will be much lower. Now, in less liquid or volatile market, the spread may be widened significantly, meaning the cost of the trade is higher at that particular time. So this is wrap up for today's video. Now that you understand how the bid and ask prices work, you can approach your trades with more confidence, knowing when and how these prices affect your entry and exit points can make a big difference in your profitability as a trader. If you found this video helpful, make sure to like this video, subscribe to my channel, and hit that notification bell so you don't miss any of my upcoming forex trading tutorials. If you have any question about bid and ask prices or any other forex concept, drop a comment below. I'll be sure to answer them. Thank you.